Hey, welcome back to Terminology Tuesdays, where we go over one financial term on a Tuesday that's really good for you to know. What is today's term? Marginal tax brackets. Ooh, sounds boring. Where you see it. Lately, you might have seen mention of marginal tax brackets on some very hot articles that came out talking about the ultra rich and how they avoid paying taxes despite being in the top marginal tax bracket, how they should be paying the most taxes out of everybody, and how they don't. But that's a different video for a different day. Or you might have thought about marginal tax brackets whenever you were actually doing your taxes this spring or every other spring. Or finally, some people just talk about marginal tax brackets, and that's really my motivation for making this video, because every conversation I've been in where we talk about marginal tax brackets, we are getting it wrong. It's time to break these down so we can all understand them better. It took me a little while to learn, so I hope that in this next 3 to 5 minutes, you'll really get this down and you can speak confidently to your friends who might also misunderstand them. What it means. Marginal tax brackets are different rates that you pay taxes based on how much income you make. As a side note, that's how the rich people don't pay as much taxes. They report less income, so they can build wealth in other ways that aren't reported as income, where you and I with our salary, bonuses, tips, all that stuff, that counts as income. That's how we get kind of hosed. But again, different video for a different day. We can all kind of start with our understanding at the same place. We pay more if we make more. We pay less if we make less. All right, we're all still there, but there's a really common misunderstanding that I've run into a lot. People say things like, oh, well, I'm right below the next tax bracket bump, and so I don't want to make more money because then it'll bump me up into that higher tax bracket and I'll end up actually making less money because I'll get hammered with taxes. I don't want that. Guys, oh my gosh, this is a critical misunderstanding. This is not the way this works. Please do not turn down more money. Oh my gosh. For the sake of this video, let's talk about 2020 tax rates. I'll put them all up right here for you so you can see them. And depending on if you're married or not, the actual amounts of income that go along with these change. But for the sake of these examples, I'll use married people filing jointly. That means you're filing with your money all together. Okay, let's start off like this. Each chunk is isolated from the other chunks. Let's say as a married couple filing jointly, you make $85,000 in a year. That means on the first $19,750, you pay 10%. 10% of $19,750 is $1,975. Then the next chunk up is independent of the first one. That amount of money between $19,751 and $80,250 gets taxed at a little bit higher rate at 12%. You make more than that upper limit, so you've filled this one up all the way. That amount of money equals $60,499, in case you're a nerd like me, and 12% of that is $7,260. $7,260. Now this next tax bracket is the one where your total income kind of stops. It meets in the middle of the tax bracket. We treat this chunk relatively independent of the first two as well. This is the important part. Whatever amount we have over $80,250 gets hit at this big tax rate of 22%. But only that amount, not everything below it, not your whole salary, not everything, just this one little bit that falls within this chunk. So because you're making $85,000, we'll take $85,000, we'll subtract $80,251 because that's the threshold to get into this next chunk, this next tax bracket, and we're left with $4,749 that falls within that highest tax bracket for you. 22% of that works out to be $1,045. And that's it. That's really how they work. Each little piece is taxed at its own rate, but if you go all the way up and you get into a very high rate with your maximum income level, that doesn't then affect every dollar you make. Which makes sense, because if you're not making that much money, you probably shouldn't pay that much tax because you need more of your money just to live. Where if you're making tons and tons and tons of money, you can afford to pay more taxes and still live. Okay, one more example for those of us who are less number inclined. I was driving home one day and I thought of this example, so hopefully this is helpful. Let's look at a bucket. As you can see, I've marked lines on the bucket representing these different tax brackets. The water that's going in the bucket represents your income, and the rate that you pay on that chunk of income only applies to the water that's between those two lines. Now, it's not the whole bucket, so if we fill it up to a similar level as in our example here of the $85,000 level, you can see at each little piece, you're paying those respective Rates, 10% down here, then 12%, then finally 22% for that little bit that's at the top. I'm not sure why I thought that that was somehow a much more convincing analogy for this whole thing, but on my way home, I had a brainwave and I just thought this is the way to describe this. So let me know if you leave a comment that says bucket, that means that somehow the bucket helped you to understand this whole tax bracket thing a little bit better. This video is not sponsored by buckets. Why do you need to know this? The primary reason is honestly just so you don't avoid making more money. Please, please, please do not avoid making more money. Take the money. And now that you know how these tax brackets work, that probably sounds really silly to you because you're going, well, yeah, of course I would take more money. Even at the highest bracket there in that example, I will come out with 78% of the money and the government will get at most 22% of the money. And that comes before standard deductions or anything else that comes into play. So that's like the most you would pay. Of course, I would take 80 or 90 cents on the dollar. Why not? But the confusion here is shockingly common. You are no longer one of the confused people. You know how this works. You're gonna take the money. The other reason it's good to know this is you may need to think about it whenever you're doing your taxes. For me, the program I use automatically kind of does this for me, or if you hire someone to do your taxes, they'll figure that out for you. But overall, it's good to know how these kind of things work in case you have to manually do anything on your taxes. If this video was helpful, consider giving it a like and subscribing to my channel so you don't miss any more in Terminology Tuesdays in the future. I've got a whole playlist here of Terminology Tuesdays videos. There's a handful now, but I have a ton planned, like 30, 40, 50 of these, so that you'll have a virtual library of terms so that you won't have to ever Google them again. You'll get a great explanation and definition of each term, and you'll be equipped to make really good financial decisions. Or if you'd like to watch something else, here's a video that YouTube thinks you would like to watch next. Thanks, bye. Man, I really need an intro song for Terminology Tuesdays. Is there anybody out there who's a musician who could write like a 5-second intro song for Terminology Tuesdays? That'd be so awesome. For whatever reason, I'm thinking of like 90s sitcom Terminology Tuesdays, but with better music than that, please.